And in 2018, those same banks, who had most of which had been net sellers over the previous several years, bought more gold as a group than they did in the previous 60 years combined. In 2019, those numbers were almost up 100% by those same players. And then, lo and behold, it must have just been a coincidence. The BIS said, oh, by the way, gold is now a tier one asset. Makes you wonder, were they told, get your house in order, repatriate your gold and start buying it? Here we go. And this has been a trend ever since that is accelerating. And yeah, as you were saying, 2022 was a huge year, and 2023 was as well. In fact, over the last 2.5 years, the central banks have bought more gold than at any time in history. And when you have a central bank like the United States Federal Reserve, and the U.S. government, who find it appropriate to weaponize the dollar as the world reserve currency, it creates very, very, very big problems.
Today, we delve into Andy Shechtman's intriguing insights on China's strategic accumulation of gold and its potential impact on the U.S. economy. With central banks buying record amounts of gold in recent years, coupled with China's relentless acquisition spree for 17 consecutive months, the global dynamics of reserve assets are shifting. As the West grapples with a declining interest in gold, China's voracious appetite for the precious metal raises eyebrows. Shechtman suggests that this move signals a significant shift away from U.S. treasuries, posing challenges to the dollar's dominance as the world's reserve currency. Could China's gold strategy ultimately destabilize the U.S. economy?
Yeah, well, first of all, I think what is behind this surge in accumulation of gold, really, you could lay it at the feet of the West and their weaponization of the dollar. And, if we go back to the previous crisis, 2008 and 9, really the central banks were just beginning to, or the gold market itself was just beginning to ramp up till it reached its peak in 2011. But it was a very, very different time in 2008. For example, the Fed had a balance sheet in 2008 of, I don't know, $700 or $800 million, not the $9 trillion that we saw it get ramped up to here over the last few years. But I think what's really behind the accumulation of gold, there are a few things. Number one, in 2019, the Bank of International Settlements, which is the most powerful bank on the planet, the central banker's central bank, they reclassified gold as the world's only other tier one reserve asset. And, our media doesn't just do a poor job of telling us what's happening. They do no job. How many people really know that gold was reclassified tier one? Since the end of World War II and Bretton Woods, there's been dollars and treasuries as tier one assets. And then there's gold. After 75 years nearly of it just being dollars and treasuries, why would the central bank, the most powerful bank on the planet, reclassify gold as tier one? And interestingly enough, if you go back 2 years before that to 2017, when nobody wanted any gold, when people just wanted Bitcoin and S&P 500 and buying Airbnbs to, real estate all over the country to turn into investment houses, no one was buying any gold. And in fact, in 2017, most of the sales that the industry was receiving were people selling, not buying. It was a very unusual time. But that's when the German Bundesbank made a very big deal about repatriating their gold from the New York Fed and the Bank of England. And within a few months of that happening, the Bank of Turkey, Hungary, Poland, the Czech National Bank, the Dutch National Bank, the Bank of Austria, all of these Eastern European banks said, yeah, we want our gold back too, by the way. And they said the same thing to the Bank of England. And in 2018, those same banks, who had most of which had been net sellers over the previous several years, bought more gold as a group than they did in the previous 60 years combined. In 2019, those numbers were almost up 100% by those same players. And then, lo and behold, it must have just been a coincidence. The BIS said, oh, by the way, gold is now a tier one asset. Makes you wonder, were they told, get your house in order, repatriate your gold and start buying it? Here we go. And this has been a trend ever since that is accelerating. And yeah, as you were saying, 2022 was a huge year, and 2023 was as well. In fact, over the last 2.5 years, the central banks have bought more gold than at any time in history. And when you have a central bank like the United States Federal Reserve, who and the U.S. government, who find it appropriate to weaponize the dollar as the world reserve currency, it creates very, very, very big problems. So when you look at U.S. treasuries, which not only since 2000 haven't really done a whole lot because of the suppressed interest rates and then the jack up of interest rates. Actually, the treasury market hasn't been so great recently. But when you look at the performance since 2000, gold has outpaced it tremendously. But what gold offers, and I think this is really to the heart of your question, what is driving the demand for gold is that gold is an asset that is not simultaneously someone else's liability. Gold is an asset that, as far as these central banks are concerned, not only has outpaced the bond market considerably over this last 25 years, but has no sanction risk, no confiscation risk, and no default risk. And so what I really do believe, and I find to be one of the biggest contrarian indicators of my career, to your point, if you look at the ETF participation of the West, it's falling at a 45-degree angle. Much of the public has been selling into this rally when the Chinese public has been buying so voraciously that they continue to get trigger stops on their ETFs where they have to halt trading because the demand is so outrageous. Coupled with, as you mentioned, the Chinese buying for 17 straight months in a row. They're the largest accumulator, the largest producer. They don't sell hardly an ounce. And you add into it the rest of the BRICS countries who I believe are finding safety in numbers and de-dollarizing because of the weaponization of the dollar. And instead of putting excess reserves into U.S. treasuries, I believe that gold is replacing the treasury bond in a very meaningful way. And I think that really is what is supporting the price of gold. All of this would nary hardly any U.S. participation in the respect that the common belief is that 0.5% participation for the U.S. public, from Joe and Jane Sixpack to the Harvard Endowment Fund, it's next to nothing. So it's very impressive, to your point, that we see gold doing what it is doing with virtually no U.S. participation. And well, when that happens, it'll be interesting to see what happens to the real potential of gold when it gets some substantial Western investment behind it, rather than just the world central banks.
Continuing with Andy Shechtman's insights, he highlights the paradoxical rise of gold amidst a strong dollar and positive real interest rates, traditionally considered gold's kryptonite. Shechtman questions the dollar's supremacy as the world's reserve currency, tracing its roots back to the petrodollar agreement struck in the early 1970s. He emphasizes the growing sentiment among global players, particularly in the Southern Hemisphere, viewing the US as hypocritical in its environmental policies and potentially moving away from the petrodollar. Shechtman hints at a possible shift towards a common settlement currency, a basket of commodities and currencies, a notion echoed by Sergei Glazov.
Gold's been rising in the face of a rising dollar and positive real interest rates, positive real return, if you believe the CPI. I mean, really, you should, the Bureau of Labor Statistics, we should take the L out of it. It should be the BS, because we know that the CPI omits many of the things that are actually inflating. But if we take it for what it's worth, a strong dollar and a positive real return typically would be kryptonite to gold, yet we find it continuing to move forward. And in terms of, is this the end of the dollar's supremacy? I would argue, like I said, its hegemony is gone, because, I guess we have to make a definition. What makes the dollar the world reserve currency? Now, it used to be backed by gold after World War II, but as we all remember our history lesson, all the gold was getting bled out of the treasury when de Gaulle from France called our bluff and said, look, there's more dollars being created than there are gold bars backing it. So he sent warships over to New York Harbor filled with dollars and said, please give us the gold. And we did. And that's when Nixon closed the gold window. But it was 3 years later in 73, well, 2.5 years later in 73, when we dispatched Henry Kissinger to Saudi Arabia to strike a deal with the Saudis, and he did. And the deal was, we'll protect you, and no one will ever mess with you again. We'll provide munitions and training and support. Before that, you and OPEC, by extension, will value oil in dollars. It has been the petrodollar, we will call Bretton Woods 2 loosely, where it was our protection of the Saudi kingdom and by extension OPEC that has given us the synthetic demand, the hegemony, the supremacy. And when you weaponize the dollar, and when you realize the lead economic advisor to the United States government, a man named Jared Bernstein, his entire thesis is to lose the reserve status. He's written reports on it called Dethrone King Dollar. He's been interviewed in the Washington Post when Trump slapped tariffs on China. Great, he says, we'll lose the reserve status maybe. His whole thesis is that it's a privilege we can no longer afford. So, could it be that they actually have thought this through in the respect that the first thing they did, in essence, after stopping the Keystone Pipeline was to sign an executive order to go green? My point to you is that the rest of the world, at least the Southern Hemisphere, is looking at this country as hypocritical. And they're looking at this country as one that is moving away from the petrodollar. And indeed, we have been seeing, for the last year plus, all of these countries in the BRICS who, a lot of people were bummed that they didn't come out with a common settlement currency in August. I'm not, and they may not do it in October. They probably will, but maybe not. But it was Sergei Glaziev who has told us for 3 years that there will be a common settlement currency that will be a basket of commodities and will be a basket of currency.
Let's quickly recap today's insights from Andy Shechtman. We've discussed the surge in gold accumulation driven by geopolitical factors and central bank actions. Shechtman highlights the potential decline in the dollar's supremacy and the evolving global financial landscape. Your engagement is crucial, so remember to subscribe, like, and share your thoughts below.